What's the story behind the net inflows? It did seem as if this was not what the market was anticipating. Was the market just way off beat, or did something unexpected happen?
Good morning. Hello. Yes, let me come on to the net flow composition, because I do think we have to look through that. But firstly, just to recap, as you pointed out, that we have had a very strong start to 2021 with really positive results in the first quarter, with a near record profit before tax of 249 million. And that's up 39% on last year and up 17% on the prior quarter. And that's really supported by revenue growth. And as you pointed out, a record level of assets under management of 820 billion. So really strong start to the first quarter of 2021 after what was a very unique year, of course, last year. If we look very specifically at the net flow number, in total 1 billion of net inflows, but excluding cash, it's 9.7 billion of net inflows. And so I think the look through of the asset quality and the asset composition of that is quite important to consider. We did see cash outflows in the first quarter as there's a change in investor appetite, and we see a shift going into other asset classes. But in the 9.7 billion, excluding cash, that's again a near record for us in terms of quality of flows. Passives and ETFs continues to be very strong at one side of the barbell, 7.4 billion of inflows there, which was our highest quarter, and compares to 17 billion for the entire of 2020. So a really strong market growing share of ETFs in Europe in our first quarter. And on the other side, alternatives and also some of our active higher margin asset classes also attracting inflows. So I think very important to look at the quality of inflows and how that is supporting us in developing our revenue growth and profitable growth, which is a big key focus for our next stage of our corporate strategy.
Good morning, Claire. I hear you on the quality of flow story, that it's cash outflows and there's inflows into the passive sector that's done very well, and slightly better quality inflows than the outflows that are coming out in cash. But is this going to turn around? Or in next quarter, are we going to again have an emphasis on quality of flows and it's going to be a disappointing inflows picture, or do we think that there will be better inflows next quarter?
Well, we have a target to deliver a flow rate of greater than 4% of net flows over our medium-term horizon. We're very committed to that, and we're very confident that we'll be able to deliver against it. I think the cash movement that we've seen in Q1 is quite unique, and of course last year we saw cash inflows in the environment that we were operating in, with cash being a safe haven. So I would expect that we would see a continued growth in our flows overall as we go into subsequent quarters this year. And I think the quality of the flows will deliver against the revenue and the top line, which is what we want to very much focus on. Our targeted growth areas are passive and alternatives, where we're investing into growth, and we're quite happy that we've seen the returns come through from that in the first quarter by an increasing market share in the passive space and continuing interest in other asset classes, with a strong theme around sustainability and around ESG, which another subset of our cut for Q1 was 4 billion of inflows overall. So really we're focused on the products and the asset classes within that.
Yes, and let me ask you a little bit more about which types of products investors have appetite for then, Claire, because you've mentioned passives and alternatives. I wonder what kind of alternative assets are we talking about here, or which kinds of passives? Can you give us any more granularity?
Yeah, so maybe on the alternative side, in the first quarter, we've seen inflows in infrastructure assets, in real estate, and in liquid real assets as well. So really across the suite of products that we offer. We have a subsequent launch coming up in our infrastructure funds for the remainder of this year. We've seen that grow quite steadily in previous quarters, and real estate continues to be a very popular investment area. So we have a suite of innovations coming on that front. On the passive side, again, I think continued product delivery and product innovation is very important to really meet client demands in this evolving environment. And the ESG and sustainable side is where we're finding ESG equivalents in the passive suite as we launch those each quarter.
When it comes to competition in the ETF provision market, where you've been quite dominant in recent years, how does Amundi's purchase of Lyxor kind of change your strategy in terms of the competition there?
I don't think it changes our strategy in terms of continuing to meet client demand and continuing to focus on net flows. So we've had a record first quarter inflows, beating really where we stood at the end of last year as well. So we will continue to focus on growing market share. Positioning may get shifted as different collaborations take place, but I think when it comes to attracting cash and attracting inflows into ETFs and maintaining a good suite of products that meet client demands, it's product innovation that we'll be very focused on and really monitoring our market share of flows.
So focus on product and innovation, Claire. Maybe also focus on M&A. We understand you're looking for a transformational deal. Can you give us your thoughts on how much support you're getting in pursuit of that deal from Deutsche Bank, 80% shareholder, of course, in your business? How supportive is Deutsche Bank of this effort? And what kind of assets are you going to be looking for? Is this all about upsizing, scaling up in Asia?
Yeah, so when it comes to M&A, we've always said first and foremost we will of course focus on our own organic growth. We are investing into growth this year, so that will always come first, and I think that's demonstrated in our results this quarter. Is paying off. So that's first, but we are very focused on inorganic growth. There is mergers and acquisitions taking place, consolidation in the industry around us. We observe that very, very closely, but we are very protective over what we have today, and we will only engage in a transaction which we feel can deliver us incremental scale, incremental distribution channels, or add to the product range that we have today, which of course is already very diversified. Asia and China is very much of interest to us. We see China, of course, having significant growth over the medium-term horizon, and that will be an area of focus and attention for us.